the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the counters to watch. Quick recap of how we started. Well, Singapore shares began the day in the red, tracking global markets. So the Straits Times Index opened down 0.3% at 3,792 points after some 45.9 million securities changed hands in the broader market. Now, we do see the STI closing in the red as well, so let's take you through the closing numbers. Well, the STI closed down 0.2% at 3,796 points. In terms of value turnover, we are looking at 1.07 billion Sing dollars. Gainers trailed, losers 242 versus 277. Top advances for today, we've got here AEM USD, Micromechanics, and New Incorporation USD. And top decliners for the day, Venture Corp, Jardine Cycle and Carriage, as well as UOB. Now, in terms of companies to watch, we have for you Keppel, after the firm was granted a license by the US to build this 20,000 kilometers subsea cable system linking Singapore to the US. Now, elsewhere, from Singapore-listed US office REITs surging on the back of US President Donald Trump's executive order for federal employees to return to work in the office, to how China's DeepSeek topped Apple's iPhone download charts. We've got more corporate and international headlines in focus. And joining me on the line on a Monday is Chin Hui Leong, co-founder of The Smart Investor. Chin, welcome.
Hi, everyone.
Hey, Chin, and let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when it comes down to the biggest movers and the sectors that they lie in, say, as REITs, given the slew of earnings we're seeing?
Yeah, so I think REITs in general are down today. And as you mentioned, there are 4 REITs reporting today. 2 of them have already done so earlier this morning, namely CapitaLand Escrow Trust and CDL Hospitality Trust, right? So for the case of CapitaLand Escrow Trust, their distribution per stapled trust, or DPS, was down 7%. And for the Hospitality Trust, it was actually down by 12%. So they both exhibited the same sort of challenges, which is the FX, unfavorable FX of foreign exchange, and also a higher financing cost, right? And for the case of CDL, there's also normalization in demand. So I do expect the REITs to face such issues in the short term. But on the other hand, I expect the other 2 companies, namely CapitaLand India Trust and Keppel REIT, which is reporting at the market close, to actually do better, because they have done much better for the last 9 months or so.
I see. Now, Chin, let's zoom in on some of the companies to watch for today. We've got here Keppel. Keppel was granted a license by the US to build a 20,000 kilometers subsea cable system that links Singapore to the US. And I understand the system is called Bifrost, if I'm not wrong. And the successful deployment of this cable system, according to Keppel's CEO, that could generate what's said to be attractive returns for Keppel. So how are investors reacting to the news then?
Yeah, so I don't believe there's much change in the stock price, but in any case, Bifrost, which could be a nod to Thor from the Marvel Universe, it's a collaboration between Meta from the US, Telkom from Indonesia, and Keppel, of course, from Singapore. And it's a undersea cable, which connects Singapore to the US via Indonesia, which is why you have these 3 different parties involved. So apparently, Keppel invested $315 million into this $760 million project. They started in 2021, and they expect it to sort of start operation somewhere in the second half of 2025, I believe. So I think that this is generally good for Keppel, or its Keppel group of companies, because it does connect to Keppel DC REIT's SGP5. Yeah. So that's one benefit. And of course, there's also a recurring income which Keppel, the parent company, stands to earn, where they are saying that the internal rate of return could be 30% per annum. So I think that this is generally good. I'm not sure how much Keppel can gain out of this, but recurring income is always good.
Okay. Now, Chin, another counter to watch for today, and the shares up 15% today. That is Japfa, which is a meat producer and agri-food company. What is happening here is that relatives of Japfa's founder, they're offering to privatize Japfa at an offer price of 62 Singapore cents a piece, which is a 34.8% premium to Japfa's last traded price and 12.7% premium to its net asset value per share as at September 2024. How would you read into the offer, and how far are investors' reactions in line with your expectations then?
Yeah, so it's not a company which I studied closely before, so I'm purely looking at the financial numbers, right? So the offer is for 62 cents, which I believe is roughly about 1.26 billion. And for when it comes to acquisitions, generally you're either paying for the assets or you're paying for the business which sits on top of the assets, sometimes both, right? But in the case of Japfa, I think that the assets matter a little bit more, which is why when they say it's sort of like a 13%-ish premium to the net asset value, I think that it's a fairly decent offer, right? Because if you look at the business itself, while revenue has gone up, generally over the last 10 years, the free cash flow has been rather patchy and inconsistent, right? The company also has a net debt of 1 billion or close to 1 billion. So, just based on the numbers itself, my initial read, it does look like a decent offer overall. The only downside I see to it is that the last 9 months, Japfa has actually produced a much stronger profit performance. And they have property and equipment, which makes up a large part of their assets. And this could be sort of undervalued and not reflecting the real value on the balance sheet because it's been depreciated.
Okay. Now, if you're just tuning in, we're now in conversation with Chin Hui Leong, co-founder at The Smart Investor. Well, Chin, let's stay in Singapore. Singapore-listed U.S. office REITs, they have surged in the past week. Why? Because U.S. President Donald Trump, he signed an executive order, and that executive order mandated federal employees to return to the office for in-person work. And as of last Friday's close, if we look at the trio of U.S. office REITs listed here, they recorded a strong weekly gain of more than 10%. How far can this positive momentum sustain into the future, though?
Yeah, so as you mentioned, there were 3 REITs or U.S. office-related REITs, which were up 10% or more, some of them up to 16%. And there were Keppel Pacific Oak REIT, Manulife US REIT, and Prime US REIT, right? So I was trying to get a sense of how important this is directly to this REIT, right? And unfortunately, I don't think it will sort of boost them directly because when I look at Keppel, governments don't seem to be a major component of their tenants. For Prime US REIT, the contribution of the government sector is less than 4%. And for Manulife, the public administration, which I take to be governments, is roughly about 5.6% of its gross rental. So I think in terms of direct impact, it could be very limited. But on the other hand, this is, I think, maybe a landmark sort of order from Trump because this trend has already been happening. And I think what's more important is like major companies like Amazon, JP Morgan, Citibank, Disney, Goldman Sachs, increasingly they are adopting this return to office trend. And I think that the moves from the private sector could be far more important in the long run because I think as a REIT, you do not want to rely on the kindness of the executive order for your business to thrive.
Okay. Now, Chin, across the region, quite a number of markets here in Asia, they're closed today ahead of the Chinese New Year holidays or Lunar New Year holidays. Speaking of which, 恭喜发财 to you and your family.
Yes, thank you.
But Chin, all eyes today, at least before we go off for Chinese New Year Eve reunion dinner, all eyes are on China because traders, they are mulling Chinese startup DeepSeek's launch of a free open source AI model, and that could rival OpenAI's ChatGPT. Now, the launch of DeepSeek has pulled up the shares of Chinese tech firms. It has weighed on that of chip-making tool makers. So take us through the ripple effect of DeepSeek's launch today. How much of this is justified in your opinion?
Yeah, so I don't think it's a ripple. It's more like a wave, right? Because I think for the longest time,
Yes.
the conventional wisdom is that you need to spend a lot to be able to compete in this space. Some time back, I think Elon Musk spent $10 billion, and he made the bold statement that anyone who's spending less will not be able to compete, right? So we're coming into that environment where the big boys have been putting most of the money in. But along comes DeepSeek, which apparently they spent about $6 million. This number is being disputed, but it's open source, so it's all for people to see. And despite the very small investment, it's able to perform at the same level as OpenAI O1, right? And more importantly, it does not require any cutting-edge GPU. They actually using older versions of a GPU from NVIDIA. Thirdly, they are also charging far lower API costs compared to OpenAI. And as I mentioned just now, it's open source. So it's not hidden or proprietary like open source or Gemini from Google. So I think that this is a very interesting sort of landmark or milestone where I think there's a school of thought where multiple leaders believe that AI models are becoming commoditized, and DeepSeek might be sort of the proof in the pudding that they are looking for.
Okay, and before we let you go, Chin, all eyes are on corporate America this week. We've got Microsoft, Meta, Tesla, ASML not from the US, but we've got them reporting on Wednesday. We've got Apple reporting on Thursday as well. And outside of earnings in the US, we've got the latest Fed decision due on Thursday morning. So how would you prioritize what to watch as we try to sort of multitask celebrating CNY and tracking markets?
Yeah, so my suggestion is don't multitask, please prioritize Chinese New Year, right?
Okay.
Always remember you're investing to live and not the other way around. But once Chinese New Year is over, you can look at all the earnings. My eyes will be on Microsoft and Meta and their response to DeepSeek especially. I expect them to be supportive because both of them are supporting open source and believe that models will be commoditized eventually, right? And more importantly, beyond the discussion on DeepSeek and so on, I think that the MongoDB CEO actually put it best, where he said that a lot of people are bragging about how many GPUs they have, but they should be bragging more about the applications they're building. And that is really what I'm focused on. What are the use cases for AI? How much are you earning, given that you're investing billions? And that's what I have my eyes on.
Okay. And Chin, a very quick one over here. We've got about 1 minute to go, yeah? Market participants, they are almost certain, the last I checked, that officials will hold interest rates this time around where the Fed is concerned. What are your thoughts? How aligned are you with that?
Yeah, so I think that, well, maybe I've given this answer one too many times, but it is really amusing how people are trying to guess how big or when or how much that the Fed is going to cut, right? And in the end, they get it all wrong. And even when they get it right, the reaction from the market is not something you can sort of like predict ahead of time, right?
Okay.
You might get all your expectations wrong, and the market might react positively. So it is rather an amusing part of the market, but it is what it is.
Okay, as always, words of wisdom from Chin there. Thanks so much for the insights, Chin. That was Chin Hui Leong, co-founder at The Smart Investor. Thank you so much for joining us and wishing you and your family a great Chinese New Year ahead.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.